Hey, Toronto, welcome to How's the Market podcast. I'm really excited to have Ryan Carson join us. Ryan, I think we've known each other for almost 30 years. I had to do the math, but yeah, it's been about 30 years. So welcome to the podcast.
Thanks for having me, Dave. This is really exciting. I've been following your podcast and your career as a realtor and with Sotheby, so it's really exciting to be here.
And for the viewers on YouTube, you aren't seeing double. You don't need to adjust your set. We do look a little alike. A small gene pool.
Small gene pool, that's right.
How did you get into real estate law and law in general?
Yeah, I mean, it's a bit of an interesting story in the sense that I started my undergrad at Acadia, which I know
I started there. I didn't last very long. It was only a year.
Yeah, you and I ended up crossing paths again but I wanted to basically do something that I enjoyed. And so I was always passionate about sports and playing sports as a kid. Took kinesiology.
Yeah, I started in that program too.
Yeah, and so it ended up being that about 2 years into the program, they were offering the ability to do an unofficial major minor with like sports management. So I started to unofficially do all these business courses to kind of finish out my last like year and a half of school.
Okay.
Really liked business and the angle of using sports and my passion for sports for something like legal, like being an agent or working with sports organizations or that kind of thing.
Really interesting because like I was in kinesiology there and I took intro to sport management class and I decided that I wanted to come back to Ontario and then went into the sport management program at Brock. So it's very similar there.
Yeah.
Great minds thinking alike.
I had a couple buddies who were playing some good level hockey and they were playing like semi-pro or pro in Europe, like semi-pro in the States. Was helping them just with a little bit of the stuff that they were doing. Not a lot you can do with those sorts of things.
Yeah.
They're pretty scripted or whatever.
Yeah.
But it just came to be that this was something I liked, I enjoyed. So it was kind of like, I got to do something with this kinesiology, sports management piece of paper. And the idea was either go law, because that can help you maybe go down that path of the agency or sports organization work, or go into medicine, which is completely different. But I liked both aspects of what that degree gave me. I liked medical, I liked the human body, the kinetics and all that kind of stuff. But ultimately, law won out. And I think it's worked out well looking back on it all. I was an associate for just under 7 years at a firm in Burlington area. So worked and lived locally in Burlington for just under 7 years. And then it just came to a part in life where it was like, hey, it's time to kind of change my path. And so I took a leap and became a business owner and started my own firm. And what was one person and an assistant became 25 people. So it's grown and it's been exciting. It's been fun.
Now you get to take on the things of looking at business ownership, like the P&L and reviewing all this stuff. And it's not the most exciting stuff to do, but you have to think bigger picture.
It's interesting, right? Because on the one hand, it's no different than yourself as a realtor, right? Like you are your own business owner in a way of speaking.
A lot of professional settings, you have your own businesses and you have to wear many hats, whether you're looking at the internals of, hey, what should we cut back on expenses? Should we do more advertising? Do I need to hire more admin, more support staff? How do we grow the business? Is it the right time to grow the business? Be strategic on it. And then social media comes along and you're like, how do I do this?
Yeah. And so you're right. You got to wear many hats. Like you got to wear your lawyer hat and then your business owner hat. What I've learned and what I've tried to do over the years, and it's always a delicate balance between, are you taking too long to get yourself help as far as like bringing on new people, or are you arriving right on time, or are you arriving too early? It's a delicate balance, right? But one thing I've learned is, you're only as strong as your team.
Oh, absolutely.
That probably comes from sports and all that involvement with sports and just being involved with organizations or communities that were very heavily team-based.
Yep.
And could I do all these things? I guess I probably could. But would I want to?
No.
Probably no. Yeah. And would I do it as well as somebody who that's their thing? Just trying to find that balance of growing the team and having right people, right jobs.
My early days of sales in the Fortune 500 space, a lot of looking at outsourcing versus insourcing, bringing it in-house and having those discussions with business owners or larger companies. And you really have to find what works for you because there's so many different options. And sometimes you have to change it up because things change. It's, hey, you know what? Facebook at one point was the premier social media. And now it's shifted to maybe Instagram, maybe TikTok, maybe LinkedIn. As social media has expanded, and of course YouTube, hit the like button, please, and subscribe. So it evolves. And I think you have to constantly look at where you are and where you're going and see, hey, do we need to evolve in certain areas? Do an evaluation.
Yeah, no, I think you're right, 100%. Like the only thing that is consistent in life is constant change, right? And so you're always rolling with the punches. You're always changing. I mean, well, we're going to talk about it, about the market, right?
Yeah.
And wow, what a change, right? Last March 2022, March 2023, pretty different, right?
They're slightly
They're
different.
pretty different, right? So,
Yeah.
I mean, it's really interesting that
Yeah.
that is the one constant, consistent thing is that it will always change, and just how do you roll with the change?
What changes have you seen from your clients?
Well, I mean, let's go back to the peak,
Yeah.
when it was crazy.
Yeah.
It was probably every realtor's dream if you were a seller. If you were a selling agent, did you even put a stick in the ground? Probably not. You kind of said, hey, look, we're holding bids for this week and we'll see who wins, right?
Yeah.
So you went from this extreme seller's market, which was probably just over the top because there was just not enough supply for the demand. And everybody was just like, hey, if I've ever been waiting for a good time to sell, now's the time.
Yeah.
As long as you don't have to immediately buy again. I had a lot of older clients speaking to me to say like, hey, this is the family house. We've had it for 40 years.
Yeah.
I don't even have to put like a lot of work into it, and somebody's still going to buy it for a ridiculous number.
Yeah.
And they were basically more or less saying, you know what, I'm retired or about to retire.
Yeah.
So I don't need to buy right away. I might do a short-term rental, or maybe I'm going to go travel
or a winter somewhere, and then I'll come back and we can go to the cottage and we'll figure out after that.
That's right.
Rent to move in with the kids.
So I saw a lot of that. I mean, for a buyer, it was amazing. It was a great time to be a seller. It was a great time to sell. Flip side, buyer, like very tough, right? Obviously, acting for a lot of buyers was difficult. You've got bidding wars, you've got low supply.
It's interesting. It's still a lot of work on our end because you're the ringmaster in the circus when you're doing an offer night. And it's how do you make sure that you're communicating with everybody effectively? We have a whole bunch of regulations that we have to follow in terms of the communication factor and making sure that everyone's sort of on an even playing ground and that the communication's there and that we're doing the right thing for our clients. So there's organizing that. And I've been a part of some offer nights on the buying side where it's absolutely insane and it's so unorganized that it almost never ends. So there's that side of it. And then when you're on the buying side of it, there's a lot of work. So the scales kind of really shifted. And I've always told people I dream of the balanced market, where you can actually do the home inspection. Let's throw in an opportunity for a couple of days for your lawyer to review all the paperwork. We're seeing people waive status without even looking at it.
Certainly that's what we saw, let's say pre-March, April of 2022. Right? For a solid, it could have been up to 24 months. It was just mayhem. It was extremely aggressive, the market. Obviously, a seller's market. For us as lawyers, we dealt with a lot of stuff after closings. There were small ticket items like, oh, this isn't working, that's not working. Stuff that you would have found in like a home inspection. Like you could have done it, right? But you couldn't. You're offering firm offers and you're offering over list probably. Some were pretty big ticket items, like the boundary lines are completely off, or there's an issue with like the reserve fund.
There was a lot of that during the pandemic where they hadn't done the audit or it was just a delay with everything. It felt like supply chain issues.
So maybe take a couple steps back. So at the beginning, it was all this mayhem of buying firm over list. Sellers are happier than they've ever been because they're making a lot of money. At the end of the day, a lot of stuff post-closing, like just buyer issues that would never happen in a more balanced market. Do an inspection, have some review.
Take your time. You don't have to jump into a 15-minute showing, decide if you like the property, and then line up and compete with 20 other people to try and secure it.
That's crazy. So you go from that to then there was this like bottoming out point where we saw people who got caught at the top and the bottom. So they bought at the highest, but now they're selling at the lowest. And it's like, we need that sale to help make everything work on the bridge of the purchase. So we dealt with that phase for a little bit, which I think that was the most, if there was a time for us as lawyers, that was going to be the biggest exposure area.
Yeah. I imagine a clog and it would have a domino effect through maybe 10 deals or more.
You could. Thankfully, we had a very small window of deals that didn't work out. Flat out, the deals died. I don't even know if we had half a dozen, which is great, over hundreds and hundreds of deals that we did probably in that 3 to 4 month period, or maybe it was 6 months. We only saw at this point about 6 or so that have died. And of that, maybe only 50% of them have fired into, hey, we don't want to, but we kind of have to go after our losses. There's become a lawsuit of our client going after the breaching party who didn't buy.
Say a deal falls apart and one side's pursuing damages from the other side. Like, how long is that process?
It can be long. It's not months. You're talking years. The beginning of it could be quick. The creation of a claim, filing, serving that, then putting in a defense, like that kind of stuff is over in probably a month or two. But then there's the big hurry up and wait. You got to set down like
do some
mediation, examinations,
discoveries, and all that. So
all that is going to probably be on a timeline of 6 to 12 months. Court offices are regional. If you're in Toronto, you're probably dealing with a pretty long timeline.
What a nightmare when you're dealing with two people who obviously need places to live, and this is unresolved as to what's going to happen. Tough time to wait through that.
But then now fast forward to now. And now you went from the extreme of buyers aren't really happy because they're finding out all this stuff post-closing. Some of it not too serious, but some of it maybe more serious, to this like legal crossroads of the market and people getting, to no fault of really anybody, just bad timing and bad circumstances.
We looked at the numbers earlier and we're in such low inventory and the demands come back that it shifted back into a seller's market. We were hovering kind of around the balanced market. I mean, it depends on what area you're in. And also if you're looking at condos versus freehold, we've seen different waves of activity. In Toronto, we saw a lot of people, mass exodus out to buy that freehold property to Burlington. And now we're seeing, hey, you got to be back in the office. So now people are coming back to buy that condo again. I would say right now we're more in a seller's market. It's almost a divided market in terms of where we have the stuff that isn't necessarily appealing, older, it's dated, and it needs a bunch of work, and people don't necessarily have the appetite to take that on. The price can also have a factor on that. And then the good stuff that comes out goes like that in multiple offers.
Interesting. So it's still buzzing pretty good. If you've got a good property, it's still good. Has there been a big decrease in sale prices? If you did year-to-year comparisons?
Absolutely huge. And volume of sales is way down. But the headlines you're going to see this month comparing to the peak to a year later are going to be the worst, and then they're going to gradually get better as it sort of evens out. So that outlier point, right, is always going to create the great headlines, the attention grabbers.
Right.
But you really have to focus locally and see what's going on. And really, as best as you can do, I always feel like I'm trying to find the right apple to compare the other apple to. And it's never perfect. We can get close. The best thing is if there's a lot that's been divided, there's the two detached or semi-detached built at the same time beside each other, and your neighbor just sold. That's the best example you're ever going to get. But that's so rare.
That's pretty. That's a unicorn probably, right?
Yeah.
But that's interesting.
Earlier in February, I was in 15 offers, 20 offers, that sort of stuff. And it's not as crazy as it was before. We're actually seeing multiple offers. If it's maybe in the 5-ish range, it might actually have conditions on it still. Or it might be a little bit over the list price, but not too far. It's not like everything's selling for hundreds of thousands of dollars over the list price.
Which is probably a good thing too. With that, the interesting thing that we didn't run into too badly when everything was well over list was the big worry from a finance and a legal standpoint is, well, just because somebody bought it at an excessive amount over list doesn't mean that it'll be appraised for that. And as you probably know, bank financing is based off appraisal, not purchase price. And so somebody agreed to buy this thing for $2 million, but it only got appraised for 1.5. How are they coming up with the extra 5? You know what I mean?
Yeah.
And so interestingly, I never saw too many problems of that.
I'm always very wary. I tell clients, listen, there's not necessarily a correlation between list price, the actual value, and what a property sells for. It's what it sells for is between the two parties and what they agree upon. And we can put the fair market value label on that because it's such a term that just says, hey, what are two people going to agree upon?
Right.
So you try and look at what's going on in the market to see, you can look at averages, but at the end of the day, averages are averages. And, if it's a really great home, well, chances are more than one people are going to want it.
That's right. You're right.
Have you had any clients reach out to you, say, hey, we're looking to sell our place, but we're worried about the buyers might not close because of raising interest rates for whatever factors?
We haven't had anybody have those exact discussions with us per se. We have dealt with a couple scenarios, but very few and far between in the last 30, 60 days. Now that I think we haven't seen further increase in rates, I think everybody's settling in. The question will be, are they going to bump it now?
They're like, okay, we're going to pause. I'm like, don't say that. Because I can't trust you from when you said they were going to stay low for a while. This is just even more confusing.
From the reports that I've either got professionally or just personally myself, it seems like they've done what most of them said they would do, which is they were going to steadily increase it all the way through 2022, get to the beginning of 2023, have maybe one more, which they did.
Yep.
And so then it indicated that they're going to break. They're going to leave it steady for a bit through, let's say, to the fall.
Yep.
Then I read something the other day, which is correlation between the connection between the U.S. and Canada, and the Feds bumped theirs up, and so they're like, "Oh, does Canada have to follow suit?"
You have to remember we were before the Fed, so we'll see what happens. I think the interesting thing of when the pause comes is it's about a year after the first interest rate increase, and what the stats say, what the economists tell you is it usually takes somewhere from 12 months to 18 months to feel the effect of the increase. So I think it's a little strategic also to see, okay, all right, we just had a major increase. Let's see what impact is in the timeline that we're given, that we're actually going to see it.
Yeah. I think you're right. If there is another bump, it's probably going to be mild, and it's probably going to be a one-off, I would assume. All the reports that have been out there are pretty similar in what they're saying. They've differed in some small ways, but I think the Bank of Canada is pretty much done what it's been projected to do. Now it's like, let's stay the course and let's just
adjust accordingly.
Even though interest rates are going up, and that can be frightening and scary.
Yeah.
At the end of the day, prices are coming down. So if you have the correlating price drop with the correlating, interest rate increase, your actual cost monthly works out to about the same. But the really cool part about the drop in price is there's a lot of other really positive things that happened. You don't have to pay as much down now if you don't want to, even though maybe you saved your 20% down on 2 million is different than if it's 1.5 or 1.7. And so now you either got more money down, so you have more equity in the home right away, and or you have
more disposable income to buy the new furniture, to paint it, to do that little bit of renovation. Yeah,
exactly. Or just reinvest in a different area. Your land transfer taxes are lower.
Yeah.
Your actual registered value of a mortgage is lower. Yep. So there's a lot of positives to buying right now, even though the one highlighted negative that everybody's frightened about is rate.
I think it's taken buyers some time to get over hey, I missed out on the actual rock bottom interest rate price. I should have locked in for the 7 years, or the 2020 hindsight. Okay, let's learn from that. If we ever get back to that scenario again, I don't know if I'll ever see interest rates that low again. It's
never say never, right?
I never say never, but it's a pretty unique scenario that got us there.
Yeah, you're right. And for sure, pretty unique circumstances globally.
Yeah.
1.8 is about as free money as you're going to get.
Yeah.
I don't think really healthy either. All of what's happening right now, these extremes that we're talking about, year to year comparisons, it's because we were in, like you said, a very unique and troubling time. And so now it's,
there's no answer to it. So
let's try to get more balance, though. 1% would be great.
You're the Bank of Canada or the decision makers on how to navigate this. Of course, we're going to expect some oversteering because there's no playbook on how to do this. So there's not a whole lot of case studies on what's going to happen here. And that's why you saw so many different theories around the globe.
Are you guys getting, we're talking about interest rates a little bit, and this is always something that I like to ask others whenever I'm chatting with them. Do you guys have any stats or any projections or anything that, comes from your great resources that you have through the brokerages? Do you have anything that's projecting a wave of how people who are coming like due on like their current mortgage term? Like, so what I'm thinking of, you got somebody who is at 2%.
Yep.
And now they're going to come to their due date in 2023. They're going to have to renew at something much higher than 2%. Are you expecting a forecast of more sales because of that? And if so, is there a concern that people are going to be able to get rock bottom prices because there'll be a flood of inventory?
We have to look at it, and the initial number is a third of Canadians are renting, so they don't have a mortgage. A third of Canadians that do own their properties don't have a mortgage. They own it outright. So it's like, what size of the pool are we actually looking at here is the factor. But I think when we break it down is in Canada and in the GTA here, we have a supply issue. And all the monetary policy's been on the demand side. To add to that, we're adding more and more people, increasing demand, but not supply. We're trying to increase supply, but it's
3 million people.
No, it's not even keeping us to the status quo. So to me, my fear more is that we're setting ourselves up for another boom in real estate prices rather than the market's we're going to see fire sales.
This is just a short little valley to another maybe bigger plateau.
I don't know. There's a reason why we're trying to create more laneway houses, more multiple family homes. It's because the demand's there. But if we can't build homes fast enough, that, what's going to happen? Prices are going to go up. And there is a lot of wealth out there, whether it's people coming to the country, people who have been here. And it's pretty interesting to see those folks who have had kids moved on and maybe their grandparents and their families have moved out and they started their own families, grandparents. They own maybe a couple different properties. They might own their home and say a cottage or something like that. Yeah. And there's no mortgages on them. And we've seen a boom in them. So it's how are we accessing that equity to help their kids and sometimes grandkids acquire a property? Because you look at it on major cities on a global scale, like New York, because how many generations ago was it when the average person could afford to buy something in New York? Then let's jump across the pond to Europe. How many generations or how many centuries ago could someone afford to buy it? So I feel like Toronto has been moving more and more to a lifetime renter city. And I think we're already there, but there's people trying to acquire. So I don't think we're going to have any lack of demand for those people that are distressed that have to sell. They might not get what they want, and it depends on the time of year and that sort of stuff, but there's still somebody at the right price. It's going to go.
Yeah,
it's going to go.
Well, the interesting part too will be, because like you mentioned, the whole supply demand issue. And I agree 100%. There's a massive supply issue. And that's the funny part about all the things the government has tried to do to help make housing more affordable.
Yeah.
They're not really understanding the big problem, I don't think.
Yeah.
Which is you just don't have enough houses that people can actually acquire.
Yeah.
And then to your point, like you said, your immigration policy is to bring in, 1 to 3 million people in the next 5 years or something, but you're only going to build 500,000 houses.
Yeah.
I don't have to be too smart at math to figure that one out. But the interesting part will be, not only you're talking about ownership, affordability of owning a house, right? Yeah. And that's the focus here. But it's what about just affordable housing, period? Yeah. Rental rates are already very high. If you dump even more people into a undersupplied situation, now if you ever wanted to rent, if you're a landlord, you are laughing. Because you are going to be able to set some very high rental rates.
Yeah,
so. Where are these people going to live? I just don't get it.
I don't either, and I think I saw the stat somewhere around 60% come to the GTA. I think that's probably, if you told me it was 75, I could believe that too.
Yeah.
So and I guess then define the GTA. What is it? Niagara to.
Yeah,
Aurelia.
Yeah, the Golden Horseshoe is.
So wherever the 407's ending?
Where those major highways all intersect and cross. But yeah, around the Golden Horseshoe is obviously where the center of, Ontario thinks that's the center of the world. Right? Yeah. And then you realize how big Ontario is. So
one of the things that I always ask my colleagues or other professionals, whether it be the lawyers or accountants, mortgage people, is how is technology changed your business? I know when I first got into this, your firm was one of the early adopters of video and trying to navigate to help parties close real estate transactions without physically having to come in to sign. The best way to do that over, I don't know what you guys used at the time. I don't think Zoom was around. It was some sort of video, Skype probably.
Yeah, it was. Yeah, we didn't have Zoom. Like it wasn't really in play yet. Now, fast forward to now, we're certainly trying to use as much technology as we're permitted to, right? Use technology in a way that benefits our clients first and foremost, but then also benefits us in the way we work and process. And the bottom line is time seems to be the biggest like piece of value and wealth now.
Absolutely.
The more time you have to be able to do things that only you can do, that makes you wealthier.
Or can I do that transaction while I'm on vacation or up at the cottage? If in the summer, maybe I go up north or somewhere.
It's creating options for your clients. So we have people coming in the office still. That's their option that they like and they want to do. But we have people who are using the other option of, I can get this done during my lunch hour at work. I don't have to burden the kids, don't have to come in. We don't have to park at your office.
This is good. Where do I click?
Exactly.
Which is convenient, but a little bit scary.
Well, we still do, as opposed to just sending them the link, because we have like an identification requirement that we got to constantly make sure we're adhering to because of like real estate fraud. And that's obviously been bigger in the news of late.
Yeah. It's always been a thing.
It's always been a thing.
And actually, I think with advancement in technologies, make it harder and then it makes it easier. And then it makes it harder and then it makes it easier.
Yeah, you're right. The fraudsters have a great way of figuring out maybe earlier how to use the technology to help them. And then the safeguards catch up and then it's cyclical. It keeps happening, right? So we do a lot of stuff on either Zoom or MS Teams or WebEx or like any of those secure video platforms to meet the clients. But we just basically share our screen and actually still review the document in full.
That's good.
Like we normally would. Yeah. So we're using technology in that way to just create a virtual meeting room as opposed to it being in person, although we can still do in person. Yeah. And then after we use the technology to fully explain it still, then we'll send it out for e-signing.
Do they have to do like the mugshot, hold up their ID or the newspaper?
So very interestingly enough, right now, the Law Society and the financial institutions are still allowing us to use like you just said, here's your passport. We've got it all ready from when we open the file. This is who I'm looking at on the screen. Yeah, things are matching up here. You don't look completely different, right? Or too problematic for us. Your signature matches your ID and that kind of thing.
You have a digital footprint that...
But so interestingly enough, the push is to use security screening software so that if I'm signing with you, you're on Zoom, I've got your ID up in the background, your driver's license. It's scanning your driver's license features to your features while we're on Zoom, and it tells me this is Dave or this is not Dave.
Interesting.
Yeah, so that's where it's heading. Like I'm actually like going to become like a spy. I'm like James Bond type of thing here.
I saw somebody mention about one thing to be really wary of with fraudsters is if you do have video of yourself talking and available on the internet, it's to make sure that you have secure questions that, hey, if I called you and I was like, hey, you owe me $1,000 from that golf game or whatever it is, or I send you a video of that even, and it's me, it looks like Dave, I'm pretty sure he owes me the money. And it's like, okay, I'll send it. And then it's just, I think that's the next wave of the fake CRA calling you, you owe money, send me the gift cards type thing.
They're actually finding a way to make technology sound like you.
Especially if there's the information out there. So it's, and then I'm sure there's going to be ways that people have to identify yourself, whether it's the blue star on your social media or there's some sort of hologram or I don't know what's next, but technology solves a lot of our problems and creates new ones.
It does. So it's both good and bad, right? And we're using as much of it as we can to create good options.
Does the changes come more from the Law Society or does it, because a lot of people forget that you guys deal a lot with the lenders because you have to go through your checks and balances before the money goes into one account, into your other account. And I'm sure all those lenders want to know that the money gets there safely and that it's been sent and it just doesn't sit in that trust account. And
during COVID, our ability or inability at the beginning to do stuff virtually was almost entirely driven by the financial institutions. There were a few of the major banks and institutions that back and pushing back that they weren't going to allow it.
Yeah.
So then it was like, well, so how are we supposed to get this? How are we supposed to get this done?
Yeah.
They're not allowed to come in and see us. So
Yeah.
how's this working? Yeah. And so at the end of the day, push came to shove, and everybody fell in line to allow for virtual signing to happen.
Yeah.
Each institution might have their forms or their like particular things that they want to make sure that you're doing in addition to everything else.
Yeah.
But I would say, yeah, the financial institutions more quickly drove change and regulation and that sort of thing.
One of the things that I used to try and do all the time was for the deposit of funds. Before the pandemic, you had to walk into the brokerage and deliver it. But I used to always, hey, send me your wire transfer information, because the bank account would be on there. And I knew that, hey, if my clients banked at the same institute, they could just transfer the funds into that account, or they can go get a bank draft and deposit directly into their account, which a lot of brokerages did not look highly upon, because I think it created more work for them to go in to find it. But now that's become somewhat more common, because I don't have to rush if they've only got one office and it's 20 minutes away and I don't know if I'm going to get there to get the deposit in time. I can now go to one of the major banks that they bank with and put it into their trust account.
Yeah. Oh, yeah.
So that I was really glad that was adopted. And I did a lot of times the slap on the wrist before the pandemic, but I think it streamlines everything, and it almost created people to become open-minded to, okay, we've always done it this way for decades, but let's try and find a new solution to navigate this. And some of them were better.
Yeah. Yeah, no, you're right. COVID, lots of people would say really negative things about it, but there have been some developments and some changes that have allowed for greater option, better solution. Like an easy one for us is we pretty much close all the deals now with lock boxes. So instead of people being inconvenienced to come to the lawyer's office to then go to their property, they just go there with the code and they get the key. Right?
In hindsight, that was always so crazy. Yeah, your lawyer's going to give it to you on closing. Okay, I got to go and they close. I work till 5. They work till 5. Okay.
Yeah. No, so this is more convenient.
Yeah.
It's very secure and seems like just why didn't we think about this sooner, right? Yeah. So that's a great change. Another thing that from a tech standpoint, that's really made a difference is there's a lot more is done online now.
Yeah.
The land registry office has been online for a long time.
Yeah.
But there's more searching tools and just other types of software that can allow us as lawyers to be more thorough, more quickly, and more efficiently, like cost-wise, which is always appreciated, I think, for clients in the sense of like, okay, we've done more than just the title search. We've been able to do some off-title searches for you in addition to that at a relatively low cost. And there's different softwares out there too, like to get proper confirmation about like lot dimensions, because surveys are so hard to get now because there really aren't surveys a lot anymore because of title insurance. So there's some great developments in technology that have allowed us to make it easier for clients, make it easier for us to work, as well as like from a law standpoint, but then also like protect the client almost a bit better.
Yeah, good. Let's wind it back maybe about 30 years. It's like 1995, 96-ish. Where we first met in the lovely town of Sundridge, Ontario at Hockey Opportunity Camp.
Yeah, great time.
Great time. What an awesome experience being able to work at a camp like that and with some amazing people. Just the skills the soft skills you learn at I think I was 15, 16, something like that.
Yeah. A good Dave Dubbin story is just like all the water ski shows. I was always really amazed how good you guys were, just even with what you had. I know the camp at the time that you were there, some of the equipment was pretty dated and stuff. And then as you went and started your career with the US and stuff, you obviously had like quite a bit different technology and that's like the boats and all that kind of stuff. But you guys just did some really cool stuff, and I was always amazed how awesome the shows were.
Well, thanks, man. I was just surprised somebody was going to pay me to do that stuff. And it was like, you go and you work with what you have, and you go and you try to do your best, and you get better at it. And it's actually amazing how many water skiers I've seen reach the professional levels or the national levels that came through the hockey camp. It's pretty amazing. I think hockey players make a good foundation for water skiers somehow.
I guess a little bit of advice I could give people, people, like
Yeah.
if they're thinking of buying
Yeah.
in this market, is make sure you're surrounded by a good team of experienced professionals.
Absolutely.
Work with an agent who really knows the market where you want to buy.
Yeah.
Not somebody who's like, well, they're a little everywhere.
Yeah.
Really try to work with an agent who really knows this part of Toronto that you want to live in, or this part of Oakville or Burlington, or whatever the case is, because then they really are grassroots, boots to the ground. They know what's happening.
I always try to talk to the professionals I work with, whether it's the photographers, stagers, mortgage people, because that's going to give me some insight into where the market's going. And I know you're probably at the end of that, right? Because it's the deal closes and then 30 to 90 days later,
we're up.
And the other thing that I haven't seen it too much recently, but it's these big online type shops where there might be like one or two lawyers there, but they're dealing with online leads and it's a lot of clerks doing all the work. And there's no one really on the file who's looking at it and trying to help you to think bigger about, hey, maybe you should update your will on this, or else you need advice you need to give them.
Yeah, and that's a great point. And that's something we're really reflecting upon now that the volume's been a bit slower, using it as an opportunity to try to not just be like hunters out there looking for like the next deal, saying, and you're probably doing the same thing. And realtors have actually been really good at this for many years, is constantly going back to their network and talking to their clients they had, because they were probably happy with you. And so why not go to that person?
Yeah. In real estate, if you talk to successful agents, the majority of them will tell you that probably 70, 80, 90% of their business comes from their sphere of influence, family, friends, people they interact with. It became very sexy to chase online leads, and it's a great way to complement it and try and grow your business. But still, it's going to be your sphere of influence and referrals from that. Yeah. And I think, everyone hates that phone call when the salesperson calls you. And as a sales guy, I've always conceded to be like, okay, give me your pitch. If I'm interested, I'll ask further, but I'll always listen to the pitch. I think the pendulum always swings, right? And I think we're actually might see the pendulum, and I feel like it's already started coming back to where people are putting more value in that belly to belly business. Actually, you know what? I want to go and meet the person. I want to sit down, have a coffee, have a conversation, just because I have that moment. I built that trust. So when something comes up, I can feel more comfortable reaching out, making that phone call, or maybe the next one can be a little bit more online and detached, but the relationship is there. And that, I want to say, like almost an emotional connection is there of trust.
Yeah, absolutely. For sure. Yeah. A strong power team.
Yeah.
Is always, I would encourage buyers to really put in place.
Yeah.
They'll hopefully solve a lot of problems for you.
Yeah.
Hopefully they're not big ones, but
you get ahead of them.
They'll get ahead of them, prevent them, or make bigger ones much smaller than they could have been. For sellers, I think like having a plan B is important, right?
Yeah.
Making sure that if you don't sell this for as much,
saw a lot of plan Bs get rented
as much as you need to. What does that mean? Plan B to help make sure that you don't have a domino effect happening in your affairs as well as like maybe others. So that's probably what I would say for buyers and sellers. Everybody's situation is unique and different. So if you need to have a one-on-one or a conversation, I'm never too busy. So.
And where would everyone reach you?
They can check us out on our website, which is just the www.carsonlaw.ca.
Yep.
They can follow us on Facebook, Instagram, LinkedIn.
We'll put all your links in the description for everyone.
So they can find us everywhere. And, like I said, I'm never too busy to personally take somebody's email or phone call. So I'm happy to receive and hear from people. And my cell number's on the website. I think there's a short window here for buyers to really get a good deal, call it a good deal, because I think you're right, especially if they don't make an interest rate hike, it stays.
Yeah.
I think that'll be enough of a vote of confidence, at least for the next 3 months, for people to be like, okay, this is my time. It's the whole adage of buy low, sell high. Why not buy right now? Whether it's personal use or investment, might as well try to buy now.
Yeah.
Some people are standing on the sidelines because they're still a bit nervous or concerned. So competition's lower.
I just hope that we see more homes come to the market so that we can have a little bit balanced in terms of the number of transactions can increase and more people can find a home and make the moves they need to. Because if we stay in this low inventory situation, the demand is there. And I think it's just going to keep building. Thanks for coming on. We'll have to have you back soon.
My pleasure. I'd love to.
Let us know in the comments below who is the sharper dressed ginger.
I think you're the winner.
My vote's for yours.
Well, I tried to make sure I could do the best.
And we appreciate that.
Yeah.
So
I look good.
thanks for tuning in. We'll see you next time. Take care.